right, legends, let's do some technical analysis here on the price of Bitcoin. Let me put the music ever so slightly here in the background. Okay. Woo. So much fear in the market at the moment. Okay, just looking at Bitcoin here on the daily time frame, just want to go through some common sense, I suppose, for lack of a better word. Remember to smash up that like button. Not a lot of you in the stream today or yet. I'm sure people will still join or maybe watch a little bit later, but here I am providing the alpha, providing the technical analysis. We will go through the probabilities, discuss, what structure we are looking at. And, are we still going to claim the high or not? That is the question. Are we still going to claim the high? Okay. Or has the bear market still? Yeah, guys, there's so many people talking about a bear market. And when so many people are talking about a bear market, well, perhaps, price is going to surprise all of them. Anyways, right, legends, what I want to discuss here is just let's go through a little bit of timing here on the daily time frame. I'm going to zoom in. We can go through the daily. I'm going to go into the 8-hour, 4-hour, 15-minute, and if there's time, why not even the 5-minute time frame? Okay. I did discuss a couple of scenarios, trading setups. If my alarm goes off and you see me being distracted, it's because I've discussed a very specific trading setup with our Legends Pro community this morning. And if that alarm goes off, I need to pay attention. I need to pay attention because I don't want to miss that trade. Sorry guys, I just have a very important phone call I need to take quickly. Just give me a second. Okay, there we go. Sorry about that. I might have to take this phone call again because, yeah. Anyways, right, legends, let's dive here into the technical analysis. Let me say hi to the beautiful community. Goeiemorgen, meneer. Wes, welcome to the live stream, man. Elevator music making a comeback. Uptrend is back yet, yes. And as per the thumbnail, I did put in the thumbnail, V-shaped recovery. We're going to discuss that probability in a moment. Okay, 95k incoming. Yes, definitely a possibility. 95k incoming. We will discuss that scenario as well. Okay, so a couple of scenarios I want to go through. So hi, welcome. Remember to smash up the like button. And let's get into the technical analysis. So people are talking about bear markets at the moment. Right. I think the one thing we have to acknowledge, guys, is that structure, and this is something that I nailed on in my previous live stream. And if you watch my previous couple of live streams, I've just been saying structure is the most important aspect to consider before anything else. Structure always comes first. Structure will always invalidate any other indicator. Moving averages, Bollinger Bands, whatever you use from an indicator perspective, structure always comes first. Always. Okay, you have to imprint that in your mind. Okay, and as long as you have higher highs and higher lows, the trend is still your friend. Okay. People can speculate on bear markets. People can speculate on bear markets. People can speculate on bear markets. But as long as the momentum is to the upside, you have to respect the trend. The trend is your friend. It's as simple as that, guys. And the trend is still up. We still have higher highs and we still have higher lows. It's as simple as that. Okay? And yes, I will change my tune, okay? Because I know there's people going to laugh at me. Well, what if Bitcoin does that? Ha ha ha, Dewald, everyone else was right and you were going on about structure. Well, then I will change my tune because now structure is showing me there's problems. Okay, once we take this high, then the structure is telling me before anything else, because it's the most important thing, that if people are going to speculate on a bull market over here, okay, then I'm going to be the person that says, no, bull market's over. We've changed structure. There's a higher chance you're going to make a lower high and continue to the downside. And then you form that bear market structure. Okay. For now, based on structure, especially on the higher time frame, I don't know why people can consider bear markets. Okay, you have to break structure. And unfortunately, that's a big gap. I know, it's a massive gap. Okay, there's still what? From where price is at the moment to that low, it's still another 26% drop to the downside. Unfortunately, that is what you have to wait for. If you want to speculate on a bear market, there's always another opportunity to get back in. Because if structure breaks, it always comes back for a retest. And that is where you short for that leg to the downside. Or another couple of legs to the downside, depending on how deep the bear market lasts and how deep price falls to the downside. Okay, because you can't form a 1, 2, 3, 4, 5 and just continue. Okay, unless the project dies. And we've all seen capitulations to the downside, but that's usually in altcoins. That is where people resign. That is where people leave the project. That is where projects run out of money. That is where there's people involved. You see capitulations to the downside. It just goes to zero. Okay. Like what happened to a couple of projects the last 2 years already. Okay, also from a timing perspective, legends, is that let's take this little impulse. Okay, let's start from this impulse. This little rally to the upside, it needs time to cool off. And usually, in most instances, your corrections are longer than your impulses. This is where the FOMO kicks in. This is where everyone is happy. This is where people join all of the live streams. This is where people are absolutely just euphoric. And then this is where people get depressed and they lose all the money that they've made during this rally. And the same thing over here. Very happy, depressed. Very happy. Now, you know, we're on extreme fear at the moment. Also, from a timing perspective, I can quickly just show everyone is from the start of this impulse to the end of this impulse. Well, okay, this correction was actually shorter. Okay, from here to here, this correction actually finished after the 0.618, which means it was around about 70% of the time. This was 70% of this time. Okay, so there's a balance. There's more or less a balance, but you don't want the correction to finish here because it's too soon. Okay, it needs to meet the minimum requirement. And that's the song that I've kept on singing over here. I can't remember. It was with this dip where I told everyone it's too soon. Okay. It's too soon. And then it looked like we were going to continue and then we smacked back down. So the probabilities do play out very often. Right. Then just another example over here. We had this rally from this low. Okay. There's good reason and technical analysis that supports that this was actually the end of the corrective structure in a triangle WXY. So I'm not going to go into too much detail, but the impulse started from this low to the highest point. You take your time fib and yeah, you can go see, okay, from this low to the highest point of the structure. Well, again, it finished here around about the 0.618. So 60%. Impulse 60% of the time, but there's also reason to believe that the impulse actually came to an end here, and this is part of a corrective structure. So if I move it up, okay, then also 70%. Okay, the correction took 70% of the time of the impulse. Very nice, very nice. Nice to see these little things lining up over here. Right, so now we take this out the way. And now we look at the current structure. I have to consider this the high, because this is a three-wave structure up, which means there's a higher chance of this being part of a corrective structure than the impulse ending over here. Okay, but for the traders that are not experienced, you just take the lowest point and you take the highest point, and you at least want that low to be done after the 0.382. Okay, but if I take a fib here from the low to the high, whoops, time fib from the low to the high. See, now this is where it becomes interesting, because this is now the structure we're dealing with at the moment. And you can see, as per all the other impulses and corrections, we're now after the 0.618. So that 70% mark, you know, if it's going to repeat, is very close. Maybe end of November, middle of December, maybe the correction will be done. But it could be done because at least this low was made after the minimum requirement from a timing perspective. Okay, so, I mean, guys, all I'm trying to paint out over here is to say that, well, people talking about bear markets, okay, people get so, especially in the crypto market. I haven't seen this in the stock markets as much from a trading, you know, the traders that trade the stock market. But crypto people get extremely over emotional. Okay, after this massive rally, I remember this as clear as daylight, specifically this structure over here. There was so many bear market thumbnails all over YouTube, all over X, people just posting it's the end, because specifically, and the reason why this one was so bad, okay, is because you have a 1, 2, 3, 4, 5, and everyone was saying this is the end of the impulse, we're going down. But the structure told me a different story from a technical perspective. The structure told me that you're going to claim the high again before you claim the low. Okay, so this structure, I must say, is a little bit more tricky. This structure is definitely a little bit more tricky because we have a 5-wave move down. So where there's a little bit of hopium for the bulls is that it is very strange and not common at all to end a bull market in a 3-wave structure. If it did this, I would have said, now we on, let's start talking about bear markets, even if structure is still intact, if it did that. But to end something in a 3-wave structure is very rare, because then you start talking about ending diagonals. And when I look at the ending diagonals on the macro time frame, there's a couple of problems. So it's not an invalidation, it's just a game of probabilities at the end of the day. Okay, so for now, we still have a higher high. Okay, and price can still, there's little support there, there's support there from a worst case perspective, and that is the zone that you do not want to lose. So the maximum target the bulls needs to defend, regardless of 50-day moving averages that I see is trending everywhere. Everyone is talking about the 50-day moving average. I thought about, you know, should I include it in my live stream and go and figure out how to move this average, how to use this average? And I said no, because everyone is talking about it. I see it everywhere. Okay, so you guys know that 50 line that's running here at the moment, that 50 moving average that's running here at the moment just got tapped. Okay. There's my 50 moving average. You guys can see it, the yellow line, right? Okay, but market structure always comes first. So this little line, or this consolidation area, lines up perfectly with the 786. Okay, and from a bullish perspective, any move to the upside and a retracement to the downside, the maximum bullish that is still considered bullish is the 786. But it's the maximum. If price taps the 0.886 here, then you increase the probabilities of taking the low. But as long as price is here, the probabilities will always remain higher to take out that high. Always. And the longer the correction takes from a timing perspective, so let's say it still does. It still goes up. It still goes down, but it dances around inside of this zone, but it continues sideways. The longer the corrective structure continues without taking this low, the higher the probability becomes to take out the high. So it is good that we've now crossed the 0.618 from a timing perspective. Okay, so I mean, I'm here on the Coinbase chart, 1-day time frame. As you can see, when I take a fib here, like I've got here at the moment, you take a fib from the high, from the low to the high. Well, we've just swinged the 50% Fibonacci, which is considered a strong Fibonacci level. Interesting fact, did you know that the 0.5 is actually not a Fibonacci number? It's not an official Fibonacci number. It's just the halfway mark between the high and the low, but it's not actually an official Fibonacci number. Everything else that I've got here, except for the 7, the 618, 382, 2.36, 786, 886, those are Fibonacci levels. But we've included the 50% Fibonacci level from a trading perspective because it usually gets good reactions and we can use it from a trading perspective. I just wanted to, chappy fact, did you know that the 50% is actually not a Fibonacci level? Right, guys, as I was shooting my course and still shooting my course, I just realized that, you know, these are some of the things that I pick up when I do my research and refresh my information and stuff like that. Interesting fact, 50% is not a Fibonacci level, but it does get respected from a trading perspective. So, you know, here on the daily time frame, as long as price does not close candles below the 50%, well, that is a bullish sign. And also at the moment, it looks like a swing failure pattern. Okay. And if I'm not mistaken, I think we also have a daily level over here. I think we have a daily level. Yes, there's a daily level. Look at that. You have a daily level. You have the 50% Fibonacci. You dip below. You currently still have wicks left behind, which is a bullish sign. So this could potentially be, as per the thumbnail, the V shape here to the upside to at least come and claim this high. We could see a V shape over here. And I will go through the Elliott wave scenarios that do support the scenario. And I think Andy actually spoke about it yesterday in his live stream. There is a scenario that supports a V shape over here. Okay, and that's why I've included it in the thumbnail. For now, based on the price action we see today, guys, no one, okay, I don't know how to stress this so that the penny sinks in for everyone, okay? No one can predict the market with 100% accuracy. No one. Okay, you just have to apply your trading strategy with good risk management and you trade probabilities. There's always a chance that price is going to move against you, and that is why you have a stop loss in place. But if you're trading a probability that has a 70% chance, there's always that 30% chance that you're going to get stopped out. Okay, but it's not gambling, guys. It's not gambling if you're trading probabilities with good risk management. That is what separates gambling from trading professionally. Because from a professional trading perspective, you are trading with probabilities. You are trading with the probability of the 70 or the 65% or the 80% probability. And in that rare instance that you are wrong, you have good risk management in place and you're not risking more than what you can afford to lose. That is smart professional trading. Gambling is you go in with everything that you have, you close your eyes and you hope for the best. That's gambling, guys. Then rather go to a casino and have a couple of drinks and get drunk, because you're going to have way more fun. Right. So, yeah, that's basically what I wanted to cover here on the larger time frame. For now, we have left wicks behind. So what I mean by I can't predict the market, well, if price wants to continue the momentum here to the downside, I cannot foresee that. But based on what I see right now, I see a bullish sign. So there is a potential to start looking for long opportunities because it could V-shape over here and at least go and claim this high. And I will go through the smaller time frames and go and explain that scenario that could play out here. Okay. Mr. Mark Dutch in the house. Welcome, Mr. Mark Dutch. Subscribe. Hit the Notification bell, share with friends. Yes, why not? Why not? Because this is where we do pure technical analysis without bias. Okay. Right, legends. Now let's go on to 4-hour time frame. Okay, let's talk a couple of probabilities and scenarios over here. So on the 4-hour time frame, just want to make sure that everything is still fine over here. Yes. Okay. On the 4-hour time frame, okay. Let me just make sure that I've got this entire structure included. Okay, this is just technicals at the end of the day. On the 4-hour time frame, well, we still have a mountain of volume, that price needs to break over here. Okay, so there's still a lot of volume that could support a bounce back to the upside. And this is also a very interesting level for a swing failure. If price wants to continue down here, okay, it gets acceptance back above. Okay, definitely a trading setup that I will be willing to take, especially if you swing this low. Okay, these lows. Grab all of the liquidity below those lows. That would be absolutely amazing. So to the downside, I am still interested in longs. I don't care, guys. I do not get fearful if I see this. I see opportunities. Okay, I see volume nodes. I have Fibonacci levels. I see the consolidation areas. I know that nothing continues forever to the downside. At some point, you are at least going to get a relief bounce. Okay, a relief bounce, and I can take advantage of that move. Okay, and if I have an attempt right now at the moment, for example, so if I'm in a long position at the moment, you can be absolutely sure that I am managing my risk properly. And if I get stopped out and I'm wrong, okay, I'm not going to cry about it. And if I do cry about it, then I made a mistake. I made a mistake, and I need to face myself in the mirror and say, you stuffed up. Okay, right. So still a mountain of volume that price needs to fall through here at the bottom. Okay, it would be nice, and this is something that I pointed out to our Legends Pro community. It would be nice to swing that low. Okay, it would be so nice to swing that low, get acceptance back above, show a sign of strength. And I'm not saying it's going to do that, guys. I'm just saying that it provides a trading opportunity. I start taking profits when you hit resistance. Okay. I often kick myself because I take one of my strengths. It's a double-edged sword. One of my strengths and weaknesses inside of trading, because we all have strengths and weaknesses inside of trading. One of my strengths and weakness inside of trading is my strength is I have exceptionally good risk management. One of my other strengths is almost every single time when I get stopped out with profits. That's also one of my other strengths. One of my weaknesses are I don't leave my positions to run for long enough. But I can't complain. I'm still, when I look at my accounts and my spreadsheets, I am still profitable overall. I'm not losing cash. I'm still profitable. Okay, yes, one of my weaknesses is I need to work on leaving some of my positions to run for longer. Because I can tell you guys now, I caught that top. I caught the top. It was a trade that I highlight inside of our Legends Pro community, and I took most of my profits over there. I was out. Now you can imagine if I just left 5% or 10% of the position open, well, yes, I would have been smiling right now. So that is one of my weaknesses that I'm trying to work on, because we all have things that we need to work on from a trading perspective. But I can still tell you, I made a significant amount of profit with that trade. A significant amount of profit. I'm happy with those profits. Yes, one of my weaknesses is I need to learn to leave some of my position open to run for longer. Okay, but I know I'm not a very patient trader. I want to get in and I want to get out. I'm happy with the profits. That's just my personality. I want to get in, I want to get out. I don't want, to ride the emotional roller coaster up and down, up and down. It doesn't really fit my personality, but I know it's a weakness that I can work on to make my profits even more profitable. Okay, I caught this bottom. I caught the bottom and I took most of my profits inside of that consolidation area. Because one of my strengths inside of my trading journal, what my trading journal is showing me, one of my key strengths is to catch bottoms and tops. Bottoms and tops. And make no mistake, with every top and bottom you see there, there's plenty of them that I have had a successful trade. But then one of my weaknesses are I don't leave my trade to run long enough. I just take profits too aggressively. If I'm in profits and I'm happy, happy days, okay? I close the position. Because I had another guy, I had someone ask me the other day, I was like, Dewald, I saw you took that trade. You shared the P&L, everything. Are you still in that trade? I was like, no, I'm not. Okay, but guys, I don't mind because at least it's not a weakness that's costing me money. I'm still being profitable. Okay. And I can tell you now, make no mistake, if price wants to fall a little bit deeper, okay, and it recovers, I'll most probably be in that trade. If I'm not sleeping, I will most probably be in that trade. Okay. And hopefully I'm not going to close my position. Over here, maybe I'll leave some open to run for the next time. And then I can come here onto the live stream and say, guys, well, I've got a 1,000% position that's still running. I have taken most of the profits, but it's still running at least. Okay, I need to work on that. I know I need to work on it. We all have something that we need to work on as technical traders. Right, but if your weakness is costing you money and preventing you from being profitable, then you really need to work on it hard and you need to solve it. Okay, so that's my little spiel over there. So anyways, let's get back into the structure. Remember to smash up that like button. Okay, Dewald, can you speak on what is the pro and con of taking that wick that we left here to the downside? Okay, in terms of bullishness, of bearish, I'm going to get to that. Why? I'm going to get to your question. I think I know exactly what you mean. Okay, if number 3 is in and now forming shallow 4, the 5th wave, I think will stop near. Okay, cool. We will go through that. Guys, I'm going to discuss the probabilities now. I know in the beginning, when I started talking about Elliott wave theory, it's always something that interests me. And in the beginning, when I started my YouTube live streams, I had a basic understanding of Elliott wave theory. And, you know, I'm still learning as a trader, guys. And every month, my Elliott wave theory knowledge just became better and better and better because it just becomes better with practice. I kept on practicing, taking notes. If a structure doesn't make sense, I'll brainstorm with Andy. Andy will brainstorm with me. Because sometimes, both of us, sometimes I will phone Andy and say, Andy, I have no idea what the hell is going on here. Especially, you know, in the earlier days. And then we will brainstorm it together. And sometimes Andy will also share a couple of scenarios with me and say, hey, Dewald, what do you think? And I'll say, nah, this one doesn't look great, or this one looks better. Have you thought about this? So, you know, you help each other out. It's not easy, guys. It's not easy, especially not Elliott wave theory. Okay, but I think I have come a long way. Okay, with the help of Koens, I always need to give credit to Koen. If you guys don't know who Koen is, go and check him out. Koens Trading, I think, is his channel. I mean, he has taught me most probably 80% of what I know about Elliott wave theory. But someone can only teach you so much. Then you have to go and practice, and you have to go and back test, and you have to go and teach yourself. Okay, so now, speaking about Elliott wave theory, let's go through a couple of scenarios. So maybe, guys, before I even show the scenarios, let's just do it fresh. We have a high. Okay. 1, 2, 3, 4, 5. This is why I'm considering this high in a leading diagonal, potential leading diagonal. And because this move up is a 3-wave structure, I'm considering all of this as part of the corrective structure. Okay, so let me just start off by saying that. So since we formed that high, okay, since we formed this high, what is this? And can this be the end of the corrective structure? Okay. Corrective structures, I have to stress, can be very complex. Do you guys remember this one? What on earth is this? Because people will look at this and they will say, it was a consolidation. But eventually we moved higher. But try and go and count this, guys. You know, if you're interested in Elliott wave theory and you're starting out, or maybe you think you're a little bit experienced, go and count this structure. Okay. Go and count the structure from a corrective perspective and see if you can make sense of it. Okay, so now let's get into the structure. So for me, the obvious thing is when I look at this high, okay, I'm taking you through my thinking process as well. This looks like a three-wave structure, not a contracting diagonal, because you're not allowed to have a flat inside of a contracting diagonal. So I have to always give probabilities the benefit of the doubt. There's a higher chance, much higher chance that this is a three-wave structure. ABC, WXY, however you want to count it. Okay, it does count nicely as an ABC to the downside. Okay, so you have a three-wave structure, which you can then label a wave A. Okay, there's your, since the high, you fell down in a three-wave structure, so now you have a wave A. Okay, because an A wave can be a three-wave or a five-wave structure, doesn't matter. But now you have this to the upside that took the highs. So the most logical structure that I go towards is a flat structure. You have an A in a three-wave structure. Okay, which means that your B has to be a flat, which it did. It created the flat, it claimed the highs. So I label that a B. Okay, and then we have a 1, 2, 3, 4, 5 wave structure to the downside. Okay, so I label this as C. Now you have an ABC flat. Beautiful, makes sense. But shit, we took the low again. We were not supposed to. We were supposed to go up. It was supposed to be finished after an ABC flat. But now we took the low. So what now? Okay, that's now the question. Now this is now where you become a little bit creative. Okay, so you have A, you have B, you have C, but now I know after you have an ABC, this can also become an A or a W, because now you're extending the correction. You always have to consider an ABC first. After a C wave, you can then create another A or a W. Okay, so let's entertain the W. Let me just redo this. Okay, we have now W in C. Okay, so you have a three-wave structure in a W. Inside of your W, you have an A, B, C. You guys get the point. Okay, it's not easy, guys. It's not Elliott wave theory. It's not easy, but I'm just showing you my thinking process that I go through. Then you have this here to the upside. And for those of you that remember, okay, I wanted to show everyone this one over here. Where was this? Okay, do you guys remember me talking about this scenario? Expanding structure, where I kept on saying I cannot give the scenario the highest probability. It's extremely rare. It has less than 1% probability of playing out. You have an expanding structure in a wave 1. Very, very, very rare. And then on top of it, you have an ABC flat. ABC flat, which is also rare to see a flat corrective structure after you formed a diagonal. Okay, and what we had to give it the benefit of the doubt, because it's not an invalidation, it's just a very rare structure. Well, now you know. Okay, it is rare. Okay, it didn't play out. It got invalidated. No more. Okay, so sometimes you need to just trust the probabilities. And I spoke about this many times in my live stream where I said, guys, I cannot give the scenario the highest probability. The one scenario that carries higher probability for me is to say that, well, maybe this is a 1, 2, 1, 2, and we continue, and then we took the low and we invalidated the double 1, 2, because that carries higher probability than an expanding structure. And then the last option on my mind was that, okay, expanding diagonal. Where was it? Here we go, this one. Okay, again, diagonals takes the lowest probability. Not as low, a leading diagonal at least has higher probability than an expanding diagonal, but diagonals always have lower probability than a normal corrective structure or impulsive structure. Well, we took the low. Okay, so we invalidated the structure. I did highlight in many live streams that it's very early to talk about the structure, because usually I wait for at least wave 3 to be in before I consider a leading diagonal. Okay, so this one got invalidated. So those two bullish case scenarios down the drain. There was also a live stream that I did last week where I told everyone, I think the exact words that I used is to say that, guys, if it looks like a three-wave structure, it smells like a three-wave structure, the levels balance from a three-wave structure perspective, then maybe it's a three-wave structure. And we are just hoping that it's going to be bullish. Okay, I did a live stream where I discussed this and I just said, guys, it just looks like a three-wave structure and the probabilities to claim this low is extremely high. So, you know, as long as you maintain higher lows, which we did not, we took the low, and then the last bullish structure was the expanding because we took this low, and I told everyone it doesn't look pretty. Okay, and then we took the lows. So, I mean, it turned out to be a WXY. This, in actual fact, was a WXY. This is what this was. You have a flat in an X, you have an ABC in a Y, in a W, okay, and then you have an ABC in a Y, and it balances perfectly. There's nothing wrong with the levels. It's just so nice to count a three-wave structure in here where I felt like every time we had to force the bullish counts. Well, now we know, okay, from a education perspective, now we know, okay, well, if it looks like a three-wave structure, it smells like a three-wave structure, it balances like a three-wave structure, it's most likely a three-wave structure. Okay. Just wanted to paint that out. Okay, so now the question, let me get back to the structure over here. Okay, so remember, guys, let me draw this out. Okay, so you have oops, let me do this one first. You have A, B, C. Okay, make it slightly bigger so everyone can see it properly. Okay, oops. Let's do that. Now you can see you have an ABC. After an ABC, especially if you claim the low, then you label this as a W, because now you know the correction is still continuing. Okay, now you know. I think it's the same thing that happened over here. You have an A, you have a B, and you have a C to the downside. Okay, then you took it again. Now that becomes a W, because you can see the correction continued. Okay, right, that's basically what I'm trying to demonstrate over here, guys. So I'm gonna go a little bit faster. I know I'm trying to keep it very educational and show you my thinking process, but I think I'm gonna be here the whole day if I take you through every single scenario that I'm considering. So the question that I want to answer here is that, well, can the low be in? Can the low be in, considering that you have a W over here? Well, then you have to label this a X, and an X wave can be a WXY, like I've just explained on the smaller time frame. Okay, then you have to label this an ABC in a Y wave. So yes, there's a chance, but there's just one slight problem with this scenario. There's one slight problem. Okay, from a timing perspective, if I measure the entire W, okay, so from this high where the A wave started, okay, A, B, C, this is your entire W, and I click on X, or let's just click on W, okay, and I take it to the top of X. You want to see a relationship in time between W and Y. And Y did not finish after the 0.382. So if Y did this, I would have said, okay, but you can see that Y is very shallow in time. So you have this monstrosity that took forever to complete in a W. X is fine, okay, X can be a short connector wave, but then you just have this. To complete a Y, not the highest probability. Okay, but we have to consider that remember, time is not an invalidation, it impacts probabilities. Okay, so one of the scenarios that I had on my chart is to say that, well, maybe, okay, maybe, just maybe, well, what if this is a WXY? Y that is now either complete or very close to completion. Okay, so yes, there's a chance that this could be the low, but unfortunately it doesn't carry high probability. So either the correction still continues sideways. Okay, it doesn't have to take the low again. Just remember that. It doesn't have to take the low. Price could come up here, go down, come up, go down, but at least you want the corrective structure just to continue a little bit in time so that this wave can balance out. Okay, this wave can balance out. You want to see a relationship in time. Right, so that's basically what I wanted to point out over here. So let me take this out the way. One of the other scenarios that I was considering is, well, you know, yes, the WXY that I'm discussing, but I am extending it in time. So one of the other scenarios is we still have the W, we still have the X, but this is an A wave to the downside in a 3-wave structure, which means that your B has to be a flat. And this is why I'm also saying there is a possibility for a V-shaped recovery over here. Okay, if this is an A in a 3-wave structure, you get a B in a 3-wave structure that has to at least hit the 0.9. When you take a fib from the high to the low that we've currently created, it needs to hit this zone. Okay, yeah, above, just above the 0.88, there's a 0.9, like very close. Okay, if you have a 3-wave structure in an A wave, your B wave has to hit a flat target. If we create another leg here to the upside and we fall again, now we have a 5-wave structure. So you can drag your A down because A is allowed to be a 5-wave structure. But then your B wave does not have to hit this zone. You can have a very shallow B wave and then fall back to the downside. So price at the end of the day needs to show me the way. Okay, so this is one of the scenarios that I'm currently watching, is to say that the low is either in a 3-wave structure. 1, 2, 3, A is in. We create either a B or a C to the upside, and I'll get to that scenario now. And then we still need to finish the C wave. 1, 2, 3, 4, 5. But now you can see, look at the beautiful relationship between these two. It just looks better. Okay, so I know that everyone is excited about the bull market continuing and everyone is talking about a bear market, but what if we still get a corrective structure that ends end of December, maybe even in mid-January, and then we get continuation to the upside? Okay, so I have to consider bullish case scenarios still at the moment based on structure. We still have a higher low. Okay, we still have a higher low compared to the entire structure. One of the other scenarios is to say that, well, okay, and this is something that I brainstormed with Andy yesterday as well, is because we looked at this structure and we said, well, this could also be an ABC, and then your Y moves over. And like I've explained, it's very short in time. Okay, but it is a possibility, definitely a possibility. Okay. Another scenario is, well, let me go back here because I think I have this on the Binance chart. Guys, I know I'm jumping between charts. Okay. Yeah, on the 1 hour time frame, there's also the one that Andy highlighted yesterday. Let me see if I still have it. Or did I do it on here? Where did I do it? I know I saved it just before the live. Oh, here we go. And we still have this one over here. So let me go in here. Okay. I'm starting to move over all my Elliott wave things to the Coinbase chart, guys. So please bear with me. Okay. So you have an A wave to the upside. Okay. This is a B wave because it's a 3-wave structure. This can be a B wave. And guess where it bounced? It bounced inside of B flat targets. Perfect, bounce inside of B flat targets. You then go up in a C wave, which then gives you your X. So you still, okay, let me zoom out a little bit here on the 4 hour just to show you where we are from a structural perspective. Still looking at this as an A, B, C. Let me redo that. A, B, C, okay. Coin, I think yeah, I mean, whichever pivot. And then this becomes your A, B, C in an X, and then you still complete a Y wave. The only reason I don't really like the scenario, but I know it can definitely play out, is that it's still going to take much longer than this one to complete. It's going to take much longer than this one to complete. So from a timing perspective, it's because after you have your X, you still need an A, B, C, okay, inside of a Y wave. So it's just going to take longer, but definitely a possibility. So the reason I put, okay, let me get to the meat and potatoes over here. The reason I put V-shape on the thumbnail today, because we have a three-wave structure at the moment, it does open up the door that this can be A or a B. If it's A, you at least expect the flat to end over here in a three-wave structure. If it's a B, you expect a C wave to the upside to take the high. But in both scenarios, if price can hold, okay, I'm expecting upwards momentum. Does that make sense? Okay. So I don't want to get everyone's hope up here and say, okay, it's only up from here, right? We have to observe the local price action. And I did go through the 5-minute time frame with the Legends Pro community in a video update this morning. I don't think I'm going to have time for that today. I also want to reserve the trading setups for the Legends Pro community. So if you want to join the Legends Pro community, okay, where I do discuss trading setups and why and where I'm going to put my stop loss, where I'm going to take profits and so forth, here's the link to join our Legends Pro community. Okay, if you want to come trade with me, support the channel, you get the best deals on these exchanges by using the links down below. You won't get these deals when you Google these exchanges. Okay, cost you nothing extra. You support the channel, you get the best deals. So, also, Bluffin has got 15% cash back on the money that you deposit. Okay, weeks 20% cash back. You get upgraded to VIP status 1. BTCC, okay, you can trade commodities, gold, silver, and you get up to $10,000 sign-up bonus. Okay, so let's carry on. Right. Now, just a little bit of a doomsday, guys. Just a little bit of a doomsday scenario, because now I have discussed the bullish case scenarios. How can I put it? The worst case scenario that I see for the moment, if we are still going to get bullish momentum, the worst case scenario that I see for the moment is that this structure forms a 5-wave structure. Okay, you have 1, 2, 3 at the moment. At the moment, it's a 3-wave structure. If price does this, it creates another corrective structure like it did over here, and it comes back down. That is where it starts becoming a little bit dangerous, because now you have a 5-wave structure down. And when you see a 5-wave structure down, there's always the possibility for a 3-wave up and continuation to the downside. Okay. But there's also the chance that it could be an A wave. You go back up for the B and you're basically going to fall to the downside to complete a C wave. So it could still be bullish in the long term, but in the short term, a 5-wave structure is always dangerous. So if the bulls wants to reverse where price is, okay, it's perfectly fine if price still does this. It's perfectly fine because it's still part of the same wave. But as soon as you see a larger correction that matches this correction or is even longer and it takes the low again, that's where it becomes dangerous, because then you cannot label it as a 3-wave structure. Then it's a clear 1, 2, 3, 4, 5. Oh shit, 3-wave up and you continue momentum to the downside. Okay, so I know that a lot of people are talking about, well, what if, Dewald, we absolutely just tank it to the downside? We have formed, okay, a 1, this was our 2, and now we're going down for 3, 4, 5. Okay, there's just, guys, this is a scenario that could play out. I just see one problem with the scenario at the moment. There's no volume. Okay, in a 1, 2, 3, you want to see volume increasing, and for now you have the most amount of volume in this wave. So I cannot give this scenario the highest probability, but it is a probability. Okay, price is supposed to be falling and it's not falling. And this is why I also like to look at the bullish case scenarios. It needs to fall. It's not falling. Okay, and volume needs to start increasing, and it's not doing that at the moment. Okay, based on new price action, it might do it. Okay, so this is your worst case scenario, that price just continues to the downside for 5, and you have a 1, 2, 3, 4, 5 correction, continuation, exit my positions. I've spoken about this doomsday scenario. Okay. Right, another scenario is, well, maybe the reason price is not falling or increase, maybe the reason volume is not increasing is because you're forming multiple 1-2s, okay? And then you're going to absolutely just tank to the downside once the 1-2s are finished. Okay, but then you have to form a 4 and a 5. You have to form a 5-wave structure here to form multiple 1-2s to the downside. So for the moment, okay, guys, I need to give probabilities to the scenario and price action that I see in front of me. For the moment, right now, we have a 3-wave structure. And as long as the bulls can defend this level, okay, or a little bit lower, where we have this point of control of this entire range, okay, I see, I think Andy also spoke about this, right? When you have this nice point of control of this range, you have the point of control and you have that little pivot. You have a high volume node over here. So as long as price, okay, does this, that's still bullish. That's still really bullish, because I will count this as the same wave to the downside. Okay, remember guys to smash up that like button if you do enjoy the education here. I know I go very technical and this is not for everyone, okay? So maybe for everyone watching this live stream, you like the technicality of what I present over here. I am a technical trader and I use technical analysis to trade, okay? I am not going to give you a show where I just speculate on this and speculate on that and just try and entertain everyone. If you want to learn technical analysis, well, this is the best channel, okay? Myself, Andy, Koen, these are the best channels, okay? Because I know technical analysis can get very boring. Oh God, here Dewald goes again with his ABC, WXY, teaching us 1, 2, 3, 4, 5, okay? But that's how I trade, guys. That's how I trade at the end of the day. Right, so structure needs to show me the way, and I think I have basically gone through what I am looking for here on the price of Bitcoin. From a simplicity perspective, okay, let's throw Elliott wave theory out the window. Okay, so you would say there's a higher probability in the bullish scenario. For now, Reto, for now, based on the current price action, there's a higher chance for the bullish case scenario. Tomorrow, I might change my tune. I need price to show me the way. But make no mistake, and I think that this is what a lot of people don't often get, is that I have trading plans at the bottom and I have trading plans at the top. If price goes up, okay, maybe I'm already in a long, okay, I know where to short. If price continues to fall down, I know where to long. So I don't care in which direction price goes, I have a plan and I have a plan. Because no one can predict the market. Okay, so tomorrow, if price did something that I didn't discuss on the live stream, I might be in that trade. Okay, I might be in that trade because I had a plan. If price hits this level, okay. If price does this, okay, that's what I'm looking for. I must say, this one really caught me off guard. This one caught me off guard. And if something catches me off guard and I don't have a plan, I don't trade. I just sit on my hands and I wait until it makes sense. The only plan I had over here, because as soon as I see aggressive momentum to the downside, the only plan I had is I knew that there's a possibility for an ABC flat. So the first thing I did when I saw the dump is I took my FIB from the high to the low to the high, okay, and I paid attention to these levels. Where did we get the bounce? 1.382, which is a flat target, ABC flat target. Price bounced over there. Okay. Again, my problem is I'm out that trade already. Because I didn't hold on to it long enough. Okay. I just saw the bounce, like, oh, amazing profits. Let's close the position. Right. But I think what's important is that you need to have a plan, because probabilities are just probabilities at the end of the day. And yes, most often the higher probability scenarios do play out. Okay, but you need to be ready for that 30% or 35% of the time that they don't play out. You need to have a plan for that scenario as well. So I can tell you now that if price falls here to the downside, I've already discussed the trading plan with the Legends Pro community. We know what to look for. Okay, I've already discussed it. What I am looking for, if price falls here to the downside, I know exactly which levels I'm going to keep an eye on for a long. Okay, and if price does this and it falls, also there's a plan for that. If price continues in a 3-wave structure, there's a plan for that. If price continues in a 5-wave structure, well, there's a plan for that. We have plans, okay? And as long as you have a plan, you trade your plan. Right, so from a simplicity perspective, okay, that is the trend that you need to wait for. Okay, and for the bulls to gain confirmation that the correction could be over, you need to claim this high. Okay, you really need to claim that high. You need to start changing local market structure back to the upside. That's basically what it's about. That's your soft high that you need to claim. That's your nice high that you need to claim. Okay, because if you do move up in a 5-wave structure, yes, I did say that, you know, based on Elliott wave theory, there's a possibility that this is your A, B, C, and you could go down again. But that 5-wave structure presents an opportunity. Because what if this is the low? And what if price does fall down in a 3-wave structure? What if there is bullish CVD building up against those pivots? I'm not going to let the probability of the Elliott wave scenario on the larger time frame not make me enter this longing opportunity. I see a 5-wave. I see a 3-wave. It presents an opportunity for a long back to the upside. And then later on we can say, well, okay, that was the low. But I always look, and I went into quite some detail with the Legends Pro community in terms of, okay, looking at the recent structure to determine your next trading opportunity, and just forget the larger time frame structure. Forget the larger time frame structure. But I'm not going to go into detail here because I want to start reserving some information that I share on the YouTube live stream for the Legends Pro community. So I'm purposefully not going to repeat everything that I share with the Legends Pro community inside of the YouTube live streams, because guys, you know, they are, you know, the pro community pay money to be in the community. They're learning together, and I want to reserve some stuff for them. Okay. Right, so we'll wait for the trade. I mean, this is a trading scenario, guys. Okay, that's a trading scenario. If price comes, whatever it does here, if price comes to the trend, you just play your trading your trading rules. Okay, there's another trend here to the downside. Okay, there's another trend here to the downside. So you can trade momentum. You just need to know where to take profits. So that's your short-term breakout. So maybe, you know, if you can catch this breakout, then you don't have to play this breakout because you're already positioned. Just make sure that you take profits on the way up. Okay, so at the end of the day, you don't actually need to know anything about Elliott wave theory. You just apply your trading strategy. Right, Legends, remember to smash up that like button if you haven't done so already. I know, Hawkwoods, you have asked me to look at ICP. I have unfortunately run out of time. And over 100 likes. You guys are amazing. Woo! Thanks, Mr. Mark Dutch. I appreciate it. Every single one of you for hitting that like button. I really do appreciate it. But what I would appreciate even more, if you do have it in you to do that, after the live stream is done, please just go and leave a comment. Apparently, from the research and from some people giving me some feedback on the YouTube channel, because I'm always like, how can I grow the channel? How can I grow the channel? Apparently, leaving a comment after the live stream has a much better impact on the YouTube algorithm than liking the live stream. Yes, it does impact it, but a comment, it shows engagement. People are interacting with your content. So if you really want to show some love, okay, after the live stream, I would appreciate it if you can go and leave a comment. That would be absolutely amazing. Right, legends, I have unfortunately run out of time. I wanted to discuss ETH as well, but I'll leave that for the next live stream, okay? Wanted to discuss ETH as well, but there you go, right? ETH, very interesting zone, okay? Very interesting zone. Have yourselves an amazing trading day, week. I will see you in the next one. Cheers for now.